This is Pat Walker at Mission Winners, and we're doing a video of stocks, leading stocks in the top 10 groups. Here's a fact for you. It's not an opinion. Leading groups produce leading stocks. And if you really ponder that statement, you would say, well, that only makes sense. It's just a fact. So we run screens that will find some of the stronger stocks in the leading groups, and we put them together. This is just a small piece of what we do, but I want to share it with you. Here's a biotechnology stock. Now, I have to tell you, this stock doesn't have any earnings, and it doesn't have any sales. Okay? So but it has something going for it. It's a biotechnology stock. It's in the number one group. But be aware of that, and I think that's something very important. It also trades a little thin down here. Look at this. Always be aware. Biotechnology stocks, they're great when they go up, but they can drop really hard. So I'm not saying don't buy them, but just be aware that there is risk with news risk with the stocks. So there's a number one stock in a number one group. And by the way, all these stocks have high composite ratings. Here's a number two group. Auto manufacturing. I'll drag this in so you can see this. There you go. There they are. So, in fact, I'll tell you what I'll do is I'll make it easy. I'll put it right. Yeah, will that work down there? Nope. Take a screenshot of it if you want. I'm going to drag it over here. So here's a number stock in the number two group. Race. Now let's study this chart. You will see there is a lot of running up, gapping down, runs up, gaps down, runs up, gaps down, runs up, gaps down. It's choppy. It's not real clean. Be careful with this, stocks like this, because there isn't a lot of rhythm with them, all right? And you don't want to get stuck. I'm not telling you not to buy it. I'm just telling you be aware of the chart pattern and the risk associated with it. Here's the next stock. This is SNX. This is wholesale electronics. This stock has an earnings per share rank of 94 and a composite rating of 99. Gapped up. Why did it gap up? Gapped up on earnings. Now it's going sideways. Perhaps it will lend itself to a clean base up here and then get another lift. But that's good. That's good. It's number three group. Number three group. Here's the next stock in the list. CCMP. This stock was actually written up. This is in a semiconductor stock, okay? It was mentioned in IBD. This stock has a composite rating of 93. Doesn't have any earnings, but it's got revenues. Runs up. Now let's look at this chart. Fell on heavy volume, rallied back up. Good volume here, okay? Rallied back up, and look where it paused. A lot of people just say, oh, it's a double top, and they never really go in and think, why is it a double top? One of my degrees is in psychology, and there's a tremendous amount of psychology, investor psychology in every chart. Think of this. This stock, do you think there were people that bought this stock up there that didn't sell? Think about it. You think there's anybody who bought that stock and said, oh, it's great, I'm going to keep it. And watch that sucker fall all the way here and then rally all the way back up. And what do most people say after buying it at 155 and watching it drop to 125 and then back up? They're going, thank God I'm back at break even. I can sell. They protected their egos. Folks, don't protect your ego. Protect your pocketbook. All right? Bought it here, falls to here. Probably has a little selling up there from people who bought it down here that have a good profit, that people bought it here who didn't sell and watch this thing drop like a rock and come back. So that's part of the reason why a cup and a handle works. Forms a cup, then a little handle to get rid of the last of the sellers. Just know this has made a pretty big move. All right? Here's the next stock in the list. Teradyne. Teradyne, you can say, what happened there, Pat? This is the result of earnings. Gaps up and fades. Now, it gapped up on earnings and faded. That could also be a function of the market. Don't ever let your stocks operate in a vacuum and your thought processes operate in a vacuum. Factor market action into your stock, in the stocks you own, and stock analysis too. What's the market doing? All right? So this is what this has got going on. Here's the next stock in the list, Lam Research. Again, this is in a top group. All right? This is the number 4 group, semiconductor equipment. Looks fine. It's got a composite rating of 94. Earnings and sales growth, it's decreasing the last 4 quarters, believe it or not. Negative numbers, not negative numbers, but negative comparisons the last 4 quarters. It's got a composite rating of 94. The stock gapped up. I'll do something for you to help you. The stock gapped up and faded on a pickup in volume. Is this a clean entry spot here? Here's the question you have to ask yourself. Would you see this chart pattern right here in any books saying, this is a safe place to buy right there? No. Wait till it forms a better pattern for what it's worth. The next one is Ultra Clean, UCTT, semiconductor equipment. It has a composite rating of 90. Now look at this. This moved up right here on good volume. That's really good volume. And now it's going sideways. It did fall on a slight volume pickup Friday, but a lot of things fell on a volume pickup Friday. But it's going sideways. This can go sideways and lift through these tops. That could be a candidate. Now it doesn't have negative. It's got last quarter's earnings were down 30%. Revenues were only up 9%. But let me stress, has a composite rating of 90. It has rising earnings estimates, which is important. And it's in the top 10 groups. It's group number 4. Next stock on the list. Let's get it right here. Form. And if I could tile, there we go. It's this one. Here's Form Factor. Spikes up. Has earnings coming up in about a week and a half. Reverses down. Again, another semiconductor stock. It's got a composite rating of 94. It really doesn't have... Last quarter's earnings were down 15%. There's nothing really great there. Last quarter's sales were up 4%. That's not the stuff that dreams are made of. What's the one saving grace? It's in a good group. Next stock, here we go. Integris, ENTG. Spikes up, reverses down, goes up, gaps up, and falls again. That's a function of the market. Notice where it stops, right on the rising, right here, right on the 80 EMA. Perhaps it'll bounce. Is this a high probability entry right here? Not really. Not really. Has a composite rating of 97, so perhaps it'll form a shelf up here. We'll watch it and see. CCOI. This is electronic parts. This is not on the list. And you could say, why not? Had a gap up in here, and they're being bought. That's what caused this lift. So it is not on the list. This stock is being bought. Excuse me, I've got the wrong one. I'm sorry. Let me get the right one in here. Bear with me. My apologies. CCOI is not being bought. I'm sorry, I was looking at the wrong one. Going sideways right here. Good volume pickup. You see this? That's good to see. What does that tell us? I always say this. People talk with their mouths and vote with their pocketbooks. Right here, they voted. Goes up, and now it's just marching up to 8. Is there a low-risk entry spot here? Not really. Maybe bouncing off the 8. That's higher risk than a longer base breakout, just for what it's worth. All right? Next one on the list is FN. Fabrinet. Going sideways. It tried to lift off on good volume. Here's a classic case of why the M in mission winners comes first. Market. Stock gapped up, or not gapped up, well, it gapped up a little bit and lifted off on a pickup in volume. And since then, it hasn't done anything. Why not? It's in a good group. Why not? Got a composite rating of 95. Because the market's not good right here. That's why. There you go. Next stock on the list, Jabil. Electronic contract manufacturing looks good. Earnings per share ranks 92. Composite ratings 99. Look at these tops right here. I'll draw it for you. I hope it's covered. I can't. But you can just see connecting these tops right here. That's a candidate. That's a definite candidate. One to watch. On Jabil. Earnings are March 11th, so we have time. And again, composite ratings 99. What's one negative? Fell on a volume pickup right there. Right there's my price alert, by the way. All right, it's in the top 10 groups. Here's the next one for us, Winnebago. Nice tops right here. The stock has a composite rating of 99 also. Just going sideways right here. Give this a couple of more days, and perhaps it will lift off. Next stock, Thor. Same group, okay? Thor Industries, THO. Has an earnings per share rank of 93 and a composite rating of 98. Is there a safe spot here? No, there's not. It's extended. Let the stock go sideways for a little bit. several days, and then we could have a safe entry. The reason I say this, and I say this a lot with the VIPs, a clean and simple entry gives you a clean and simple exit with a much smaller loss. Much smaller. You can run it really tight. And no day trading either, okay? No 5-minute charts. Here we go. In mode, right here. Started a lift, okay? This got an earnings per share rank of 99 and a composite rating of 99 and a relative strength rank of 99. The last time I checked, you can't get better than that, all right? We owned this back here and ran it up and took right there the last of it out. And that was a good gain. That was a real good, close to a double, all right? So what's it doing now? Just going sideways. It's in a good group. It's got everything working for it. Had a bit of a reversal bar here on Friday. We'll watch it and see what it can do. Next stock at Dexcom, DXCM, all right? We're in medical systems equipment. Going sideways. Nice tight shelf right here. This stock has great numbers. Last quarter's earnings were up 261%. Rising earnings estimates. See this nice shelf? They're looking for a 294% increase in earnings. By the way, they report on February 13th. You need to know that, okay? Which leads me to this point. We are in earnings season now. Please know the dates and know the times. Very important. Very important. Anyway, that's the stocks. Oh, wait, got one more here for us. I'm sorry. Massey. Grinding up, pulling back to the rising 8-day on decreasing volume. Very constructive. Composite ratings 99. We like stocks that go up on heavy volume and down on less volume. What does that indicate? Buying pressure, very little selling pressure. Perhaps it'll bounce off the rising 8-day. Know this, though, I'll say it again. This pattern right here, a base breakout, is safer than a pullback setup. Given that, what does that mean to you? You can buy more shares on a longer base breakout, assuming the market's good. You can buy more shares on a longer base breakout. You buy less shares on the pullback setup. Anyway, there's the top leading stocks in the top 10 groups for you, so you can see where money flows. And I hope this helps you, and I thank you. Not just the list, but the coaching that goes with it. That's what we do. Thank you.